Thank you all very much for joining us today. My name is Kevin. I'm the head of business development here at Kraken Futures, and I'm joined by Gary, who's our head of exchange operations.
Hi, everyone. Thank you very much for joining us.
So Gary basically runs all the operations on the entire exchange. So this is the best chance, or a really, really great chance, to ask detailed questions about what's happening. And it's a really good opportunity to try to understand things a little bit better. For those of you that have joined us in previous sessions, thank you very much for coming back. We really appreciate it. And if this is your first one, welcome. We look forward to spending a bit of time with you. We've got about 30 minutes of content, more or less, planned out. But Gary and I will be around to answer questions for as long as you'd like. Today is actually my favorite one, because we're going to be talking about trading futures. I need to leave this on the screen for a few seconds, but today there is no presentation. We're actually just going to spend the entire time in the demo website. And we're going to be covering a few things. So we're going to talk about volume, open interest, and maturity. We're going to show the order book, bids, asks, the spread. We're going to talk about limit orders. We're going to do limit and market orders. We'll show you how to set conditional orders, stop losses, take profits. We'll do reduce only. We'll reduce maker orders. We're also going to do like bracket orders. So that's a feature that's just been added to the website, and trigger orders as well. So we've been adding things since I wrote this last week. And we're looking forward to showing it to you. So what I'm going to do is switch over to the demo website. It is at demo.krakenfutures.com. We'd encourage you all to please try it on this website as much as you can before you trade with live funds. I'm going to sign out and show you how to get started. So the first thing we're going to talk about today is volume, open interest, and maturity. And to do that, let's look at the real website. So real website will be in white today. Demo website will be in black. What we're going to do here is we're going to go and, real website and market details. So volume will always be in this place under the market details tab. Right now, we're looking at the perpetual contract. It'll be the same thing for the June and the September contract. Volume will always show up there. And open interest will always show up right below it. So volume is the total notional amount traded in the trailing 24 hours. Before I continue, please ask questions in the chat. Gary and I are here to answer questions today. So a good result is that we answer a lot of questions. The first question, bracket orders have already been added. Yes, they have, just went live. So they are in the live site, and we'll show you how to use one today. Volume is the total amount traded in the trailing 24 hours. So one thing to bear in mind with volume is that if I buy $1 worth of Bitcoin and Gary sells $1 worth of Bitcoin, we each think we've traded $1, but the exchange only counts that as $1 of trading value. Open interest is the total number of contracts that are outstanding at that time. So when you see $30 million in open interest, it means $30 million of long exposure and $30 million of short exposure. On Kraken Futures, there is, by definition, it is always equal. So the amount of people that are long, the number of contracts that are long always equals the number of contracts that are short. It always sums to zero. Let's have a look now at the order book. So the purpose of an exchange is to match buyers and sellers. And in many ways, the order book is the most important part of the exchange. So the order book shows you all of the other traders' resting limit orders. There's three main parts to the order book. There are bids. So these are people that are buying. They'll always be shown in green. I think of it like you're bidding at an auction. So the highest price is the one that's most likely to win the auction. There are asks. These are people that are selling. So you're asking for a price. The lowest price will tend to be the one that is most likely to be filled. In the middle, you have what's called the spread. On Kraken Futures, we limit the spread to 50 cents. And in most normal circumstances, the spread is always pegged right around 50 cents because there's quite a lot of liquidity on the platform. Halfway between the best bid, which is the best price, bidding price, and the best ask, which is the best ask price, is what's called the mid price. So it's halfway between best bid and best ask is the mid. The other thing to bear in mind, these are the price levels. So they tend to go up in 50 cent or dollar increments. And these are the amounts at that level. So right now there's, it flashes in and out pretty quickly, but there's $65,000 worth of sell at the best ask. And then this column here sums it. So if you were trying to put in a $150,000 order, you would fill this entire level and then also move up an extra 50 cents and eat into that level. Gary, a question here. Does KF also provide hidden order options?
No, we don't, I'm afraid.
So in the order book, you have bids, you have asks. Bids are people buying, asks are people selling. You have the amount for sale or trying to be purchased at that level. And you have the cumulative amount going up. Let's look. Cool. So let's start doing some orders. Now we're going to go over to the demo platform. A quick tour of the demo platform. The functionality on the demo platform is identical to the live platform. So all the features work exactly the same way on demo as it does on the live production website. The only thing is on the demo site, the order book is populated by kind of like two bots that are pretty lazy. So the orders don't tend to get updated very often. It is a live order book and there's a pretty large spread. So things like funding rate will not be very accurate on the demo website. Whereas here it's $4.50 spread. On the live site, it's always about 50 cents. But this is a great place to practice. So first we're going to sign up. It will automatically give you an email address and a password. If you copy these down, they will be unique to you and you'll get a unique one every time you sign up. You can also use these to sign back in. So you can check back in on your trades at a later date. So we're going to complete the sign up process. One of the cool things that we're really proud of is the workspaces that we've created. So you can actually create, using these predefined templates, you can create workspaces and populate them with anything that you'd like. One of the coolest things you can do is also create custom workspaces. So if you have a specific setup that you like, you can go through and drag to create different things. And you can just populate it. So I want my order form here, or I want my order form there. I want my market chart there, trigger orders, order book, and so on. I'm going to use the default layout because I think that's the one that shows the information the best for me, at least. So we're going to stick with the one on the page, but you can edit it any way you want. And if you're trading with multiple monitors, you can open different Chrome windows or browser windows on different monitors and customize the layout on each one. So some traders will actually have one workspace that's just the chart and the order book, and they'll use a second monitor for order form and so on. So first thing you need to do is you need to move money from your holding wallet. This is the money that money in your holding wallet cannot be affected by your trading activity. And you need to move that into your futures wallet. So let's move, we've got $3,000 in it. Let's move a small amount over now. We've now got $739 in our futures wallet. Funds in your futures wallet are going to be used as margin for trading that token, and those funds are at risk. It's worth clarifying that you can never lose more funds than you have in your futures wallet. Can I have multiple charts in one workspace? Gary, I don't think you can you?
I don't think, not right now. I think it would all update to, so if you change the settings on one, it would change the settings of the other. We are working on, we're working on how we can allow you to, let's say, have one chart where you're looking at, the Bitcoin perpetual with, let's say, the hourly candles, and the other one you're trying to look at the weekly. We are working on how we can do that, but at the moment, that's not available.
So there are two main ways that traders will enter into a position: a limit order and a market order. One cool, we're actually updating the website in real time. So actually earlier today, we added tooltips. So now every word on the website will have a nice explanation to help you understand what the concept is. So let's start with a market order because it's relatively more simple to understand. And we're going to go in and we're going to do a $1,000 market sell order. So it requires $30 in margin. And we are going to sell it short. When I hit sell, a few things are going to happen. One, a position will open on the board, on the chart. You'll see this number reduced from 5,000 down to 4,000, and it will show up as an open position. What a market order does is it basically says it buys at the best available price. So it will say, I'm going to buy at this price or sell at this price. Yeah. So the number dropped to 4,000. The position opened up on the chart and we can see we are now $1,000 short on Bitcoin. You see the liquidation price is very, very far from where we are right now because we're trading with relatively low leverage, 1.35x. Now, if we want to, the other way you can enter a position is with a limit order. And we'll use that as a way to potentially close this position out. So we want to do $1,000. Because we sold on the way in, we're going to buy on the way out. So the way you close your position when you trade futures is you do the opposite of what you did on the way in. So we went short on the way in, we're going to go long on the way out. So we are going to look for a buy price. Let's just take best bid. It will, when you click on the price here, it will automatically populate it over here. Price has moved a bit. Okay, best bid. And we want it to be reduce only. So reduce only is one of these conditional order types. It's actually a very, very important tool if you're closing or lowering your exposure. Reduce only will mean that the trade can only go through if it reduces your overall exposure on the platform. So for example, if I go market order and I want to go more, I want to increase my exposure short, the reduce only tab will block that from me. So I always use it when I'm trying to close my position. So I've got a limit price of 1,000. We're going to go in at best bid. We're going to click reduce only, and we're going to buy. You'll see it show up there as a long limit order, and you'll also see it show up here with an X next to it. You can cancel that order at any time unless it's filled by clicking on the X. So I've canceled the order, and I'm going to go back and place it again. And here we are. We are best bid right now at the top of the book. And if someone comes along and someone actually took that limit order, and we now have no open positions and we have trade history. This is our $1,000 sell at the limit price. There's a question here. Is there a minimum amount of US dollar value to begin trading with Kraken Futures? So the minimum dollar value there's a minimum on how much you can transfer from Kraken to Kraken Futures. I think it's about $20 worth, but the minimum trade size is $1. So because the contracts are $1, you can't trade less than $1. So it's always in dollar increments. So the smallest amount, if you really want to try with just a little bit, and the site works exactly the same way with $1 as it does with 10,000 or $1 million, you can move as little as $20 over and do a trade size of as little as $1. That's accurate, right, Gary?
Yeah, and then because obviously you know if you're a professional client, you could trade up to 50x. You'd only be required to use 2% of margin to open that position. So you would only use up a small amount of that.
Cool. So we've had a look at market orders. A market order is where you're going to cross the spread. You're going to take liquidity. And a limit order is where you can also place a limit order that crosses the spread. So there's a few questions, and then we'll do a limit order that crosses the spread as well. How do I gain access to 50x leverage? Gary, do you want to talk about that?
Yep. So you'll be assigned a classification when you sign up. If it's not at 50x currently, the best thing to do is to contact support, and they'll be able to help you through that process of how they can change the classification if that is possible. It depends on certain circumstances.
Yeah. So the maybe one of the guys can put the link to this support ticket in the webinar chat. Yeah. What's the maximum number of contracts in relation to my balance that I can trade? So so we talked about this in detail on, I think, Tuesday, and that webinar is online, but it comes to what's called the initial margin. So the initial margin is set for professional accounts is set at 2%. So you can go 50x. That's where the 50x leverage comes from. So if you want to go in and pay $1,000, your buy margin required is 2% of that total plus fees. Because they don't know if you're going to do the system doesn't know if you're going to do a maker or a taker at that. So it keeps it aside just in case you taker.
Another question.
Yeah,
oh, sorry, I was going through the question.
Yeah.
So in a demo account, who is counterpart to a trade, and does that affect other demo accounts simultaneously? Yeah, so those limit orders that are being placed there, as Kevin mentioned earlier, they're kind of like just two bot accounts that are set up to run. And then if I was trading on the demo site and Kevin's trading on the demo site, our accounts would match, and yeah, both accounts would be, one would be debited and one would be credited. As there'd be, there's very long, there's a short.
Yeah. So these huge wicks that you see were people playing with the account, which is great because it shows that people are practicing and trying different things. But that's someone putting in huge buy or sell orders. I take it you can preset all of your orders ahead of time. So say I'm going short and I want to set my sell order, stop loss, and 3 to 4 PTs in advance. Let's talk about that in a 1 or 2 seconds, if that's okay. I think he's talking about a bracket order, right, Gary?
Yeah, it sounds like just setting up multiple, stop losses or take profits, I guess, once you've set up a position.
What we should do first is a limit order that crosses the spread and talk about the fees for both limit from maker and taker, and then we'll do the conditional, the advanced order types. So there's a misconception that a limit order is always going to get a maker rebate. A limit order, if it sits in the order book, will get a maker rebate if it's filled. If it crosses the spread, it will pay a taker fee. So for example, if I want to go long and I click a price that's deep on the other side of the order book, what's going to happen is it always starts at best available price and works its way up to what you've asked for. So if I say I put the order in at 9857, my price will start here and it will work its way up to this price and no higher, as long as there's liquidity in the book. So what happens here, if I go long, you're going to see this get reduced by 1,000. Oh, sorry, I have to turn off reduce only. Sure enough, that $1,000 limit order got filled. I took it. So that order would have been a taker order. So when your trade crosses the spread, when you take liquidity, basically when the order gets filled instantly, you're doing a taker order. And the fees associated with that are 7.5 basis points. It's 0.00075 on the notional value of the trade. So even though I've only got $700 in my margin account, my trade size was 1,000. So I pay fees based on the total size of the trade. However, if you do a limit order that then gets filled, you get a rebate of 2 basis points. You actually get paid for limit orders that sit in the order book. So if I go in now and I try to close my position out, I'm going to do $1,000 because I want to close. I bought on the way in, so I'm going to be selling now. And I'm going to go in, say, right there. And I'm going to sell. That limit order is sitting in the order book. And if it gets filled, I'll receive a rebate of 2 basis points on the notional size that I've traded it. You can also see it here in the chart. There, it just got filled. So I received a rebate of 2 basis. I paid a rebate of 7.5 because I did a taker on the way in, and received a rebate of 2 basis points on the way out because the limit order was resting in the order book. Gary, does KF provide fat finger protection?
Yep. So the market order that Kevin mentioned. So when you place a market order, we calculate basically you won't get filled at 1%. You only get filled up to 1% away from the best bid or ask. So depending if you're buying or selling, so only 1% away. So it won't go further than that. And as Kevin pointed out, the market order will fill you at the best available price first and then work its way up. If it's not fully filled at the 1% away, the rest will be cancelled. And then in terms of limit orders, if you're crossing the spread, so where Kevin showed that you are buying below the current best sell order, buying above the current best sell order, you can't go further than 10% away from the market price. So if you try and execute further away than that, then it won't work. Demo might have slightly different steps.
If I try to buy at 4,000, it just says would not reduce. Or sorry, I've got reduce only on. Turn that off.
The settings on here are slightly different than on prod because obviously we want to be able to maybe show things, for example, but on prod it won't let you go more than 10% away from the market price. Gary,
are maker and taker fees the same across all contracts?
Yeah, they're 7.5 on the taker side and 2 basis points rebate on the maker side.
What happens to the 5.5 basis points from the 7.5 taker and the -2 maker limit? That 5.5 basis points is the revenue that Kraken Futures. That's where our revenue comes from. That's literally the only way we make money. We don't have a trading desk. We never trade against our own clients. We make 5.5 basis points per dollar traded. And what we then do is we take 30% of that and give it back to clients every week in our revenue share. So I think, Gary, we gave back about $115,000 of fees last week, right? If I remember correctly.
I can't remember the other amount, the last week's amount, I'm afraid, off the top of my head.
It tends to be about $100,000 of our revenue that we give back to our clients. It's 30% of anything we make. We give back to clients every Friday. Everybody who trades receives something, but the payout is weighted toward the larger traders.
We've got a few more questions. So at the time of the monthly quarter expiration, is the only event when futures and spot prices are naturally equals? I mean, they can, the futures and spot price could be equal at any time during the trading of it. Like sometimes there may not be a premium or a discount on the fixed maturities. But yeah, as it gets closer, they naturally converge because you're going to sell the contract at that reference rate, we call it, which is the 5 constituent exchanges price, which makes up that reference rate. So from 5 different spot exchanges.
Gary, I think I see there's a few more questions in there, but I think what we should do, if it's okay, just being respectful of other people's time in here, let's show you what it looks like to get liquidated. Let's show you the things that you can do to avoid being liquidated, and we'll do some conditional orders along the way with that. So first of all, let's go, just for ease of use, I think long is generally easier to show, because at least for me, that's how I think. So right now we've got $740 in margin. And we're going to go really long. So let's go say 20x long. So we're going to buy a position of 14,000, call it 14,500. I'm going to do it as a market order. So what you're going to see very quickly is it's going to take everything at this level, and most of what's available at this level. And then we'll have that position open. And sure enough, there's the 500 left because it just ate the first 3 levels. And our liquidation price shows up on the chart here. So if the mark price hits this liquidation price, my position will be liquidated. So the exchange assumes responsibility for the risk in that trade at liquidation. You have to assume that your margin will be worth 0 at liquidation. In practice, we do try to do the right things for our clients. So we will try to close the position out for you in the order book, like force close the position in the order book. If we can close it in the order book, you actually receive the proceeds of the trade. So in normal circumstances, most people that get liquidated receive something back. However, we can't guarantee there's going to be liquidity there. So we tell you to expect to receive nothing if you're liquidated. So there are 3 ways to adjust the relationship between where you are now and the liquidation price. One is to reduce your position size. So we went long. So if we want to reduce our position size by say 1,000, and the ratio, if you remember earlier, it's margin times leverage equals notional size. And when leverage gets to 100, you're liquidated. So if you want to make the leverage go down, there's 2 ways to do it. One is you can increase the margin available, or you can decrease your position size. So let's start. First, we're going to decrease our position size by 500. We're going to use reduce only because we're reducing our position exposure. We started out with 14,500 and we went long on the way in. We're going to go short on the way out. And you'll see the liquidation price drop. If I buy, you'll see it go back up again. So the first way you can adjust your liquidation price is by adjusting your position size. The second way you can adjust your liquidation price is by adjusting the margin in your futures wallet. So remember, margin times leverage equals size. So if you increase the margin, the leverage will go down. So if, for example, I move another block of capital over, what's going to happen very quickly is this number will go up to about 1,100, I think, and the liquidation price will drop and our leverage will drop as well. And sure enough, 1,100, the liquidation price drops and the liquidation price is dropped here. Our leverage is now only 10x. If for some reason you want to trade with higher leverage, you can also move the money back out and the opposite's going to happen. So you'll see leverage go up. If I move money from my futures wallet back into the holding wallet, you'll see leverage go up. The liquidation price will go up as well, and the wallet balance will go down. There, the liquidation price jumps, the leverage jumps, and the wallet price goes down. So the 2 main ways to avoid liquidations are to adjust your position size or to adjust the amount of margin you have. The other way to avoid liquidations, and let's increase the leverage a little bit more. I'm just buying each time. We're now trading with quite a lot of leverage. We're at about 42x. The other way to avoid being liquidated is to use what's called a stop loss order. It's under the advanced tab. and we're going to do a stop loss. There's two types. So basically what a stop loss does is you set a trigger price and then you set the action that you want the system to take. Before we do this, Gary, should we do a few questions?
Yeah, of course. We've got a few from other platforms as well. But
where do I see the revenue shares that we get? Is that in the logs tab, Gary?
yeah, I think in the chat there was the link to the article of the revenue share program, so you can find the details in there. But it is on the platform. There's a revenue share page. I think it's the little lightning bolt maybe, or the little gift. No, sorry, the little gift present thing.
Yeah.
Yeah. So this is obviously a demo, but you would see the rank and what the estimated payout would be. We have another question on, is it possible to open up a futures account to a maximum leverage of, for example, 5 or 10x instead of the default 50x margin? So you can't, so yeah, I guess the two options are, depending on how you classify, it's either 2x or 50x. Now you can control the margin on every position by the amount of funds you put in the margin account. So as Kevin just showed with moving the funds into and out of that futures wallet, that will then set you as what leverage you're using. So you don't have to use the 50x, you can put more margin in than is required. That's just the minimum amount.
I think there was a leverage limiter. Do you want to?
Yeah.
So the leverage limiter is only there for when you're opening a position, but it allows you to set the maximum leverage you want to take on that position. So it won't work right now because we're already in a trade, but we can show it to you later. You can play with it yourself. So this will block the system will block the trade if you try to enter a position or open a position with more than 2x leverage.
Yeah, so that's good as used as an indicator to work out how much funds you would need to be in to open at a certain leverage, rather than having to, I guess, do the maths manually. Is
there a way to draw a line on the chart and buy or sell when this line is crossed? Yeah, so that would be a trigger order, right, Gary?
Yeah, so I guess you can make some edits to the chart and then setting, you would set a trigger entry. So if you go to advanced,
there, trigger entry.
Trigger entry. So this would say, okay, if the price, let's say we think if it hits 10K, it's going to go to the moon. So Kevin sets his trigger price at 10,000, and he wants to buy 1,000. He just wants to buy at the market price with 1,000 contracts. He would then buy. And there you can see this set here.
So if a trade price hits this level, it will automatically place that buy order for you at the market. It'll be a market buy. Is it possible to have multi-collateral assets for Kraken Futures? For example, USDC to collateral Bitcoin USD contracts.
At the moment, they're single collateral wallets. So to trade the Bitcoin contracts, you need to provide Bitcoin. Something that we might be working on is having multiple collateral to trade these products. So I'd say watch this space on that.
Great.
We have.
When will we enable some kind of margin isolation? The possibility to use fixed margin for each position.
Again, I'd say once we introduce a potential multi-collateral, that would be part of that. So again, I'd probably say watch this space. A few questions here. So someone's here asking, can I use the API of the demo platform while developing if I'm developing a trading bot? Yes. So you can generate API keys from demo, and you can call the demo URL as the base URL and use the APIs as documented in the API documents.
Will Kraken ever do an ICO, IEO? To me, that would be a great addition to the already fantastic platform. Thank you for the kind words. I don't know that it's in the roadmap, but I know the folks are looking at it. I can't speak any more about it.
Is it the same futures wallet for different contracts positions? That's a good question. Yes. So we have, so for the Bitcoin pair, so the perpetual, the monthly, and the quarterly, you have one wallet, which is the Bitcoin USD futures wallet, and the funds that are in that account will be used for the positions on all of those contracts. So you could go long in all three, you could go long and short, and there would be some offsetting, but if you get liquidated in one of those, it would liquidate all of the positions in those contracts basically, because it's using the same margin.
Somebody asked from Periscope, can we explain leverage, please? We actually did an entire webinar on leverage on Monday, and it's the focus of at least 2 of the videos in the education series. So we would encourage you to please check those out. They're on YouTube, and the links are, I think, floating through our Twitter as well.
There's another question here. How much of a deviation would we need between the index price and the mark price to not get liquidated? So we covered this in the liquidation webinar, I think it was 2 days ago. But there is basically the mark price that sets the liquidations, and the mark price is the mid price of the futures contract bound by the index price. So even if the futures price deviates quite a long way away from the underlying asset price, it wouldn't necessarily liquidate the position, but it can deviate for contracts that have 90 days to expire. It can deviate up to 6%. So it's quite free to allow for price discovery. But on the perpetual, it's much smaller. So it's like 0.5%. So if it does deviate above that, it wouldn't necessarily liquidate the open positions unless the underlying asset moves as well.
Gary, I think I might put this stop loss in just to show some people, in case I want to be respectful of people's time. And that was one of the things we said we'd cover. Yep. For everyone that has asked a question, we will make sure we answer all of them so that they're not forgotten or lost at all. So stop loss, what that will do is if the price hits a certain trigger, a certain action will be taken. In this case, it will put in a sell order. So I'm long right now, and I want to put a stop loss to prevent liquidation above my liquidation price. So let's say 9,800. I'm going to put the quantity in as my full trade size because I want to close my position out. So quantity will equal the size. Trigger price, let's go in at 9,800. You definitely want to hit reduce only. And the trigger signal, you can choose which price will trigger this action. So last will be last traded price, mark will be the mark price, and index will be the underlying spot index price. Generally, I would recommend use mark, it's the default. So let's go short, and there we go. So what we have on the screen right now is we have our current position open, and it's valued at the mark price. We have a stop loss order set at 9,800. So if the price hits this, it will automatically get triggered. And let's actually go in and do it based on last. So I've canceled the order, and I'm going to replace it with last as the trigger signal. And here's the liquidation price here. We also have another trigger order set up here where if the price does go to 10,000, it will try to buy more because we think it's going to go even higher. So when you're trading, you can actually have quite a lot of stuff going on the screen at one time, and you do have to pay a little bit of attention to the different things that can happen. Gary, are you able to trigger that stop loss on another screen?
Sure. What price is it at?
Are you on 98? I'll actually make it a little bit higher so it's easier to trigger.
Is it set by the last executed?
Yeah, it is.
Trigger. Yeah.
Why don't I make it higher though? We're going at 8,900, right? Oh, 98. That will be good. Yeah. Sorry. One thing that you're hearing us describe is that one of the really, really cool things about the demo platform is that you can have multiple windows open at the same time. So I generally will do this with an incognito browser and a regular browser, and I'll practice things like triggering stop losses to make sure that I understand how they work. So right now, Gary on his side is going to go in and put a big sell order, and it will hopefully trigger this stop loss that we've got. What will happen when he does it is the trigger order will be filled, the stop loss one will be filled, and our open position will be closed at that price.
Yeah, that triggered it, did it not?
Nope.
What price do you set it at, sorry?
Let's see. I've got it set at market price.
So, but the trigger is at 9,800, right? Or is that 9,600? I can't see this.
9,800.
Wait, and you're selling if it hits that?
Yep. I'll close it there.
Yeah, but it was set by, wasn't the trigger the mark rather than the
yeah, so if you have it, yep. So let's try it again. We'll set it really close and see if we can do it that way.
So I guess that's an example of it not being hit when you said it is.
So Gary went in and did a big sale, and it triggered the stop loss. So the price went below it, like the trigger the stop loss. Now, why is our position still open, Gary?
Did we go? How big was the position before?
29.5.
Maybe you didn't have enough margin. Were you trying to, was it reduce only?
Yeah.
How much were you trying to close? Maybe if you look at your log quickly, you'll be able to see the log in the top left. The account
Okay.
log. Didn't get executed. So this normally you would have this orders tab, but this isn't running on demo, but it would normally tell you why it got rejected. I can't remember what the order was, so I can't see why it got rejected on that.
That's okay. And this is something that you guys can play with.
Yeah, so that's actually a good point is, so you can place a trigger order without using any margin. But as soon as it gets triggered, there is a margin check. So it will check, have you got enough margin? And also, is it, if it's a reduce only? And if those criteria fail, then it will be rejected. And then on prod, you would be able to see that on your orders tab, but that's not running in demo currently.
All right. The trigger price will be, let's do it there. I'm going to sell. I'm going to go in and market sell. There. Yeah, so there I've actually closed out part of it on this side. So I did go in and hit the button to see how it works.
So I think what could have happened was because we'd moved the spread so much and it was a market order you used.
Yeah.
So this is because demo is quite thin. There wasn't the requisite liquidity to fill that market order, which you would see on the logs. But this is because it's demo, and obviously we're just trying to fake it to show it actually get triggered.
So why don't we, Gary, why don't we do a bracket order and then spend the rest of the time doing questions? Is that okay?
Yeah, go ahead.
This is one we've just added. So this is kind of a cool thing. So let's say we want to go $1,000. We'll do it as a market order. And this allows you to set trigger orders based on your entry price. So if we want to say, let's say we want to exit if it goes up 2% and we want to exit if it goes down 1%. I think I have to hit refresh, don't I? On the demo. Yeah, let's try that again. 1,000. And we're going to go market. It goes up 2 or down 1. And what it will automatically do is open your position for you. So we're now $1,000 long, and it's got the take profit order for you 2% above the price, and the stop loss order 1% below the price. So this is kind of a cool way to run different strategies. I think someone asked if you can do it with a trend line. Gary, I don't think you can right now, right?
No, no. You have to set the price or the percentage on the bracket order. So I think if you look at the trigger orders section, Kevin.
Yeah.
So at the bottom, sorry, the tab on the
yeah.
Yep. So you see these two orders that are placed, they're both reduce only. So that's because they're set up to try and to close that position you've just opened. So that means if one of those is hit, well, I guess the thing to bear in mind with these bracket orders is they're not all necessarily connected. So if one is hit, it doesn't mean it'll cancel the other. What happens if, let's say, the take profit is hit, the stop would still be there, but it's reduce only. So if you don't open any more positions and it gets hit, then it would just fail. But if you have open positions in the meantime, which are opposite to this stop loss, then it would be executed. So something to bear in mind that if one is hit, you might want to manage the other one yourself and cancel it.
There was a really good question in the chat of why would you use a stop loss instead of a take profit? It's actually kind of cool. So they're actually, and this is a good way to show it, they're actually two sides of the same thing. So what they allow you to do is they allow you to place an order that would normally be executed right now. So if you wanted to go sell at 9,700, your limit price would be down here and it would automatically trigger. It would automatically sell. And if you wanted to buy at 10,000, well, that's deep in the other side of the book. So you would fill instantly. So a take profit is just a trigger order that's on the other, in the profitable side of your trade. And a stop loss is a trigger order that's on the losing side of your trade. If you're short, these would be reversed. But these trigger orders allow you to place a trade that would normally be instantly filled.
Yeah. So a few more questions. So it's asking here, can a precise price be input instead of percentage? So yeah, so you can enter the price if you wish. It depends on how you want to control that. So a few people are asking about trailing stops. So we don't have that order type yet, but it is on the roadmap for towards the end of the year. So hopefully soon, TM. I think there was a question here about the XBT USD futures wallet not updating when an order's placed, but it will update. I think if you show when an order's placed, because margin will be used. So margin's not using those, but if you market close that, it should update slightly.
Yeah, so it's 660.
So yeah, it's decreased as a bit of margin is used. So it will update as you open and close positions. Say I have 1,000 USD in my futures wallet, but I only want to open a 500 USD position with 1x leverage. This will keep the balance intact, wouldn't it? So if you want to open up 1 times leverage there, you'd probably want to move. I mean, you can keep that 1,000 in and you'd be less than 1 times leverage, but you could move half of that funds to the holding wallet and just be at an exactly 1x leverage. So that means you can see that if you go 1x or less than 1x, there's an NA for liquidation price. Is that less than 1x leverage there? I can't see the screen, sorry.
No, it's got a liquidation price on it.
Okay, yeah. Yeah, so the liquidation price would be quite far away. As you can see there, it's like, more than half, less than half away. But if you're using that 1,000 in that example with $500 position, then it would, the liquidation would be very, very far away.
If you use a bracket order, why does the liquidation line disappear? Does the stop loss line preclude it from existing? It doesn't disappear. It's just in the previous thing, it was just off screen. I can put another one in and show. But it wasn't, it doesn't disappear. It was just off screen in the previous one.
Yeah, because it's zoomed in a certain way. So the lowest price you're seeing there is 9,100, whereas if it's below that, then yeah.
Okay.
Yeah, sorry. So someone's asking how do I get to the bracket order? I don't see the order form. Yeah, so it's a separate form. So you need to click the little plus in the component, and then you can see the bracket order as an option. So you can see there, if you go back to the normal order form, they're separate forms.
Gary, you want to keep answering questions and I can do a bracket order?
Yeah, we're seeing more coming through. The setting symbol for the trigger signal in the bracket order next to the take profit and stop loss gives the option of last, mark, or index. Is there a reason to have a preference of these prices? And is this feature also in the live version of Kraken Futures? Yeah, so this is in the live version of Kraken Futures. There is reason why you want to use a different option, whether it's mark, last, or index. So last would be last executed. So on this wick here that we can see on the demo site, that would have triggered. Let's say you'd set your stop loss at say 9,100, and it was triggered by last executed. You would be triggered in that case. If you'd chosen the mark price, you wouldn't be, because that relies on the underlying asset following the price, and that underlying asset price has to move as well, not just the futures contract price. An index is just purely how the index moves, whereas the mark price is the mid price of the futures contract bound by that index.
Hey, Gary, correct me if I'm wrong, but in general, if you're doing stop losses to avoid liquidation, mark price works quite well, because the mark price will be what determines the liquidation.
Yeah, exactly. And mark price protects you against, if you're trading in maybe a lower liquidity environment like this is on demo, then yeah, that would protect you against someone coming in and trying to trigger your stop. And as you say, it works the same as for liquidation, so that works well.
And if you are, like, I've heard some people say that if you're doing like more of a take profit type of thing, you might want it to be based on last, so that if there is a big wick, you catch it. I mean, that's might be one reason you might do it.
Potentially, yeah. Is XBTUSD the only future pair at the moment? No, so we have 5 pairs against the dollar. So there's ETH, Litecoin, Bitcoin Cash, and XRP.
Everything we're showing you, sorry, jump in, Gary. Everything we're showing you works exactly the same across all of the tokens and across the fixed maturity contracts as well. So all of the mechanics are exactly the same of trading. To the person that asked earlier, I put in a trade with higher leverage. I don't know if people were watching, but I set the exit price manually and then did a percentage for the stop loss. And it placed both of those orders, and now my stop loss is above my liquidation price. So in normal circumstances, you should expect it to stop you out before you hit liquidation.
there's another question here. Hi guys, I can see there are a lot of volatile spikes. Are these potential risks for liquidation? Yeah, I guess we covered the liquidation section in more detail in the previous session, which should be online now. But that's on the demo site. And I guess as we covered is the liquidation is set by the mark price, which is the mid price of the futures contract. So that's the mid price that you see of the order book, bound by the underlying spot asset. So a wick on the futures contract doesn't necessarily move the mark price that far away from the underlying spot as it's bound by a percentage. So that wouldn't cause a liquidation. So on the demo side, when you're seeing these huge wicks to 9,000, if you had a position open on demo, you wouldn't be liquidated by that.
Yeah, and this is the production site. You can see there's on the demo site, there's huge wicks, and that's just because we're playing around with it. And we encourage you to do the same, please. I think we covered the bracket orders. Is there a reason for the preferred prices, and is the feature live in production? We talked about that, right, Gary?
Yep, yep.
Cool.
I think
isn't a take profit order executed in the long direction similar to a trigger order in the long direction?
If you were saying it above, then yes, it would be.
Gary, is it possible to draw a line on the chart and buy or sell when that line is crossed?
Not to, you can't set triggers by trend lines. I mean, you can do some, I guess, technical analysis on the graph with the tools here, but you would have to set the price yourself. You wouldn't be able to say if it hits this line. You could, I guess, set the line, and then if it hits this price, then the order will be triggered.
If my liquidation price shows NA such 1x leverage, is it not possible that I get liquidated?
Yes, so if that's either very, very far away, like it's you're not going to get liquidated on that position.
Can we sync the chart with our TradingView account?
I don't think so. Don't think that's possible.
If I want to catch a quick move, such as a falling knife while in an uptrend, would you set and use a rather limit buy order or a trigger market order? Or can a trigger order be a limit order?
Yeah, trigger order can be a limit order. You can choose a limit order. I mean, if you wanted to buy lower than the current price, then you could just set a normal limit buy order if you liked, and that would then get filled as a maker order because you've sat an order in the order book. You could also set the take profit if you wished, or the trigger entry, sorry, if you wished, and then that would. It would be, I guess, effectively a take profit, right? Or a stop loss trigger. And that would effectively mean that you were aggressing because you set that as a market order. So you could just set a normal limit order for that. If that was the one where you were doing
that. Do you agree Elliott wave theory is a meme? Gary?
Embarrassingly, I'm not familiar with that.
What's the difference between trigger orders and stop loss take profit orders? Stop loss take profit orders are trigger orders. So the other thing we're going to be adding, I think in the next couple of days, will be a trigger entry order, right, Gary?
Sorry,
I thought it was live, but I don't see it here.
No, so you can do a trigger entry order.
Trigger entry. Cool.
That might have been the demo site, I think, right now.
It's there right now. It might have been what the person was talking about as well. If they wanted to, someone. So what this will allow you to do is set a trigger price that will be that would normally be filled. So we'll say 10,000. We'll go buy 10,000 at a trigger price of say 10,000. So if the price hits 10,000, I'll enter that trade it'll submit a market order at that price. The reason you would use this is because it would normally be automatically filled.
Earlier in the demo, a stop loss was rejected for reasons. Yeah, I think because if there wasn't enough liquidity. Is it possible for a stop loss to be rejected and your trade to end up liquidating? Yes. So if the stop loss triggers and there's not enough liquidity, or let's say, the price keeps moving past that and it doesn't get executed, then it would, if you hit the liquidation price, then the position will get closed and liquidated. I think that's asking for an example of reducing. I'm not sure if it's like opening and reducing a position.
Someone was asking in the video, there was an example where $98 was reduced to $48, but when you close the order, $98 was still there. That's because the account that we used for the demo is classified as a retail account, so it only has 2x leverage. And what that means is it was consuming 50% of our margin to do the short trade. So if you did it in this one, it would be slightly less, but it would be much less noticeable than it was in the demo. So the money was always there. It was just the margin was being consumed by the trade. So when you close the trade, the margin goes back into your available balance. I think those are the main things that we had to cover today. If there's people that want to see us do anything, please ask. Where is the money you earned in that case? If we're still talking about the example from the video. So what we were doing in the video is showing how to lock in the fiat value of your cryptocurrency. And it's actually a pretty cool thing that you can do it with futures. So the way you do that trade is you take the available margin, because that's all that's going to get locked in. So if you want to lock in this amount of money, the fiat value of it, you take your available margin and put a trade in for the same size. So we're going to go in 628, and so you're trying to go exactly 1x short. So we're now exactly 1x short. As you say, the liquidation price is not applicable because you can't get liquidated at 1x short. And the way this works is and for the example of 98 and 48, it does go down because we're using some of the margin for this trade, but it will come back when we close the position, and I'll show you what that looks like. So we've locked in $628 worth of value. If the price of Bitcoin goes down, this short trade will make money, and the margin will lose an equivalent amount of money because we're 1x leverage. If the price of Bitcoin goes up, the short position will lose money, but the margin will gain an equivalent amount of money because we're 1x leverage. So what it does is it effectively locks in the fiat value at the time that you entered the trade. So what I'll do now is I'll close the position. It'll be probably a little bit less than 628 because I'm doing market orders, and the order book, there's like a $5 spread on it. So the price will be a little bit off, but you'll see, yeah, 627.52. And that's because there's a huge spread on the demo account.
A few questions. Sorry.
To answer the question, that is hedging. That is hedging the dollar value of your cryptocurrency is what that trade was.
If you wanted to stop loss point to also be a trade in the reverse, you would uncheck reduce only, correct? Yes, you'd use the trigger entry and not take the reduce only. A question here about cash and carry trade. I think that's probably beyond the scope a little bit of this. There's going to be a video coming soon, I think. Kevin, is that right?
Yeah, so we have been waiting so what you're doing with the cash and carry trade, just at a very high level, it's a pretty popular trade these days. So right now, in the session yesterday, we talked about basis. So I'd encourage you to watch the video because it explains what this premium means. But basically what you can do is short the quarterly contract because the quarterly, you're effectively saying I'm going to sell Bitcoin for $9,937 on September 25th. And I can buy it today because this is the spot price for $9,733. So you short it and you stay long an equivalent amount. So you're 1x short. And what that allows you to do is capture this premium of 1.7%. You just have to hold the contract until maturity. So now that there's a little bit more of a premium, we're going to do the video for a cash and carry trade. Over the past few months, there hasn't been much of a premium on the fixed maturity contracts. And it's kind of required to do the trade. Gary, can you explain in which scenario it's best for them to use the trigger signal, such as last, mark, or index?
Sure, yeah. So I think if you're setting a stop loss, it's probably best to use the mark because that's also, if you're trying to avoid liquidation, that's also the price that is used to liquidate the position. So if you set that above the liquidation price and use the mark, let's say if you're long and you use the mark price as the trigger, that would likely be the best scenario for that. If you want to use last, I think as Kevin mentioned, like if you wanted to enter when there was a wick, then that would be useful on a trigger entry. For index, I guess it's if you think that maybe it's going to move more on the spot or on the spot side, or you want to wait until the underlying asset actually moves rather than the futures contract, then that might be when you could potentially use the index price for the entry.
And we we strongly encourage you guys to please use the demo site. Like, you can smash the order book all day long. It's actually kind of fun. You can set up multiple accounts and try different things and test features. If you have questions, put screenshots into our Telegram chat. We'll be happy to help explain things. Please put screenshots of the demo site only, as opposed to your regular site. We don't want you to leak information. Trigger mark refers to order book or BRTI. Okay.
So trigger mark is the, if you go back to the market details, Kevin, I don't think you've got it open maybe. So trigger mark uses the mark index. So you can see this one here, which uses the, the mark price.
Mark price, yeah.
Yep, sorry, which is the mid price, which is the price of the futures contract, which is bounded by the index, which is the BRTI. So it uses both of them as inputs, the order book and the index.
We'll be putting in a recording of this hopefully online tomorrow. It might even go online automatically after this, but it'll be on, we'll tweet about it and put it on a Telegram chat. And for those of you that have stuck with us this long, we just want to say thank you so much. From everyone here at Kraken Futures, we really appreciate that you're taking the time to understand the platform and the product. We know it's quite a lot, and that's why we're trying our very best to add things like tooltips throughout, to do educational series, to do these webinars. We'll be doing another version of these again, hopefully in a couple weeks' time. And we really appreciate that you're taking the time, and we're always here to help, especially in the Telegram chat. We're really proud of the community in there. The admins are going to always be standing by, but actually quite a lot of the normal traders will be happy to help explain things. Thank you very much for your time today, guys, and we'll be online if you need us. Thank you.
Thanks, everyone.